This is Business and Finance on Echo Television International. I am Rachel Tanze, and you are welcome. Now, the CBN have made it very, very clear that as long as inflation keeps going high, the MPR will keep going high also. And the MPR and the MPC, that is the Monetary Policy Committee, had a meeting and decided that, of course, there is a need for the MPR, that the monetary policy rate, to keep going high to be able to curb the inflation. Now, this was even before the former governor, Godwin Emefiele, have been the CBN governor. He had made that very clear to Nigerians that as long as inflation keeps surging high, we will continue to see an increase in the monetary policy rate. Now, this means a lot for businesses. It's no longer news. It's no longer something new for us to wonder, what does it mean for businesses? What does it mean for the common man? What does it mean for households? And what does it mean for the standard of living in the country? Now, the Monetary Policy Committee of the Central Bank of Nigeria concluded its 149th meeting on Tuesday with a resolution to raise the lending rate from 18.5% to 18.75%. Now, we are seeing a 0.70 percentage increase, which is a lot, if we must say, because now it is going way higher than the percentage increase for inflation, because as at last week we have inflation closing in at 22.79%, and now we are seeing that this is not up to 70%. We're looking at about a 40% increase on what the inflation rate was. However, we are seeing a 0.70% increase in the MPR rate. Now, that is to say the MPR is increasing way above the inflation rate. Now, this is to keep the MPR ahead of the inflation. The reason clearly stated by the CBN is to be able to curb inflation. However, we know that haven't been much of direct effect, let's put it like that, to inflation, as we know that the major reason behind the inflation in the country currently as it is now is the fuel pump price hike and the floating of the naira currency. However, the CBN, alongside its commercial bank, have to keep its head afloat and above water to be able to make profits, see gains, and be able to go on with other monetary activities in the country. And that is the major reason behind this, because we have seen that over and over and over. This is not the first time the NPR is going high. And as long as in a few weeks' time, going into the month of August, precisely, the moment we see a little increase in inflation, we are now at 22.79%, meaning if you should round up to 23% or above 23%, the MPC will be sitting down to decide a new rate for interest in money in the country as it stands now. Now, it is no news what it means for small businesses. We are seeing businesses closing, and not only are small businesses affected, but even medium-scale businesses and some bigger enterprises are seeing setback and losses as a result to the increase in the MPR, because not only do these businesses have to face the problem of inflation, as we see manufacturers talking about the cost of production going high due to inflation, because we still import majority of the raw materials of even goods consumed in the country. We are now seeing that not only will they have to deal with inflation on every level and even our devaluation of the naira, but they are also going to and have to deal with the MPR going high. So now for businesses that are depending solely for funds from commercial banks, as we know they don't deal directly with the CBN, they are going to see setback losses, and of course the prices of their services are going to go high. And we have seen in the past, and even as we are moving in the present and in the future, we will be seeing businesses shutting down because they cannot keep up with the increase in the monetary policy rate. Now, we can see that First Bank, amidst all of these, have been having ups and downs in their gross earning, but there is a report that they are witnessing some increase. Now, The First Bank Holding PLC saw its gross earning for last year jump to 757.3 billion, and we're looking naira precisely. We're looking at 28.2% higher than the figure recorded 1 year prior. While its net profit climbed by more than 3/5 according to its audited financial statement, late incoming the release of the earnings report came nearly 2 months before the deadline. Now, the banks were giving deadlines. Of course, the CBN gives deadline to banks to bring out their earnings. It's for a reason, for many reasons and many factors. Now, the deadline was for the 31st of March. They didn't meet up to it, and they had reasons for that. Now, the management citing difficulty in completing the audit of one of the biggest subsidiaries of the group as the group for the delay, making it the last of the 13 lenders listed on the Nigerian exchange to issue its audited financials. Now, the parent company of Nigeria's oldest commercial bank, First Bank Limited, achieved the feat even though interest rate, its major earning source, diminished by 4.1%. Now, what made First Bank witness a high increase in their earnings, despite we are seeing that their major earning source diminished, was that now the fee and commission income rose to 24.2% to 140.6 billion naira, helping to soften the blow of depressed interest income and revenue. Now we are seeing that these are some of the impact that this interest rate we are seeing from the CBN is going on the banks. That is how they feel it, because if we have businesses closing down, then it means businesses going to these commercial banks are going low, and we will have businesses that are not able to pay back to these banks. Now, what did the First Bank do? Now, this is going to be across every other bank. Now, we are all consumers of banking services, and we have seen that, yes, there have been an increase in service fee. Now, this is what have helped First Bank Holding PLC to be able to keep their head above water and be able to make more compared to what they did previously, despite seeing that their major earning was diminishing by 4.1%. They are able to see their income rise by 24.2% because of fee and commission income. Now, this means that they increased it, and I believe that this is in one of the major ways many banks across the country have been going about keeping their head above water, that is increasing the fees in services. And no wonder we will have Nigerians lamenting about the outrageous commission and fees being deducted from simple transaction. You have money deducted from your bank account that you are asking the bank, how and why are these fees being taken away? And the banks, of course, have reasons for it, from be it charges for ATM card maintenance, be it charges for the messages you get monthly, be it charges for the checkbook you are holding, be it charges for the kind of account you are running, saving, current, whatever type of charges they are out there. But the problem there is not that these services are given to us by the banks, but that we are seeing a surge in the increase of the fees and commission gotten from this bank. Now, we have seen that this is how First Bank Holding have been able to keep their head above water and be able to see an increase, a 28% increase in their earnings, despite seeing a 4.1% decline in their major income source in the bank. Now, we are seeing that transactions are still rising on the NGX. Now, the total foreign transactions performed by investors at the floor of the Nigerian Exchange Limited in the first 6 months of 2023 grew to 145.08 billion naira. Now, this is a 6-month report. Now, the recently released data on domestic and foreign portfolio investment report in Nigeria equity trading for the month of June 2023 revealed that total domestic transaction on the exchange stood at 1.306 trillion naira, whilst total foreign transactions stood at 145.08 billion naira at the end of the period under review. Now, the NGX is the platform, the major platform where we carry on foreign exchange transaction in the country as it stands now. Now, let's not forget that there have been policies that had made international transactors, investors precisely, to be excited, which is the floating of the currency as it is now, which was the aim or the trial for the CBN to see how they can unify the exchange rate of the country. Well, as it is now, we are still hoping that the CBN knows what it's doing. The presidency giving a go-ahead to such a drastic decision, know what they're doing, as we are still seeing the Naira falling, which we will see more forecast about how much devaluation we are going to see for the Nigerian Naira. However, as it stands now, we are seeing the NGX having a rise in transaction. And when we see a rise in transaction, this means that there is profit. Investors are trooping in. There is demand and supply for the Naira and for other foreign currency, and there is exchange that is going on. Now, we are having that this report is prepared on a monthly basis by the NGX Regulation Limited, indicating trading figures from market operators on their domestic and foreign portfolio investment flows. Now, the report also revealed that total transaction at the nation bourse increased by 25.96% from 322.92 billion naira. Now, we are looking at about $693.99 million recorded in May, and to the 406.75 billion naira, about 537.87 million in June. Now, the performance of the current month when compared to the performance in June 2022 revealed that total transaction increased by 159.87%. Now, that is a drastic and a big increase when we look at year-on-year return. We are seeing a growth from last year, June 2022, now to June 2023. We are seeing 159.87%. Now, furthermore, the total value of transaction executed by domestic investors outperform transaction executed by foreign investors. So we're looking at this drastic increase and rise in transaction and profit, not even coming from foreign investors, but investors within the Nigerian market. Now, despite the IMF forecast and reducing major like other countries forecast of growth, we're talking about GDPR growth, and we are seeing that despite the IMF reducing the growth forecast for some other countries, they still insisted that Nigeria will grow at a 3.2% rate from now 2022. This is a forecast up to the year 2024. Now, the International Monetary Fund lowered its forecast for sub-Saharan African economic growth in 2023 by 0.1% point to 3.5%. So meaning it was at 3.6%. Now, minus in a 0.1%, we are going down to 3.5%, while retaining its 3.2% forecast for Nigerian economic growth. Now, for the whole sub-Saharan countries in Africa, the IMF was looking at a 3.6%. Now, that is for the whole South Africa, sub-Saharan African countries precisely. But for Nigeria precisely, it was at 3.2%. Now, in as much as it had reduced its forecast by 0.1%, keeping it at 3.5%, for Nigeria, it still remained at 3.2%. Now, the fund, however, raised its focus for global economic growth in 2023 by 0.2 percentage to 3.5%, meaning for the whole global economy, it was a 3.3% growth, but now they are having a 0.2% increase and is now going to 3.5% for the entire global economy. Now, the IMF said global growth is projected to fall from 3.5% in 2022 to 3.0% in both 2023 and 2024 on an annual average basis, compared with projection in the April 2023 WEO. Now, that is World Economic outlook. Now, the forecast for 2023 to 24 remain well below the historical 2000 to 2019 annual average of 3.8%. It is also below the historical average across broad income groups in overall GDP as well as per capita GDP terms. Now, despite it looking that the decline is low and also there is increase of 0.2%, this growth forecast globally, not only for sub-Saharan African countries and other African regions or the African other continents like the Europe and Asia and North America, South America and all of that. Now globally, it is still way below what was forecast for the year 2000 and down to 2019, meaning global economy is still dropping and haven't reached a peak that was predicted or forecast for the year 2000 up to 2019. We're seeing a decline because at that year the forecast was 3.38 growth rate, and now we are seeing that no, rather 3.8% growth forecast, and now we are seeing that for the entire global economy it is not going above 3.5%. Now we have the Economist Intelligence Unit is predicting that the naira will be up to 1,000 naira per dollar before the year runs out. Now, this will break every Nigerian's heart, and I'm sure our heart can gladly skip a beat hearing this sad story because nobody wants to hear that the dollar will be up to 1,000 naira per dollar. Talk more of it being above 1,000 naira per dollar. But yes, we are having prediction coming from the Economics Intelligence Unit that we are going to see that much fall in the value of the naira if care is not taken. Now, the Economics Intelligence Unit is the research and analysis division of the economic group, providing forecasting and advisory service through research and analysis such as monthly country reports, 5-year country economic forecast, country risk service reports, and industry report. Now, an arm of the Economics of London has predicted that the Nigerian government will go back to a system where they have more control over the exchange rate. Now, the EIU is saying that Nigerians, of course, the CBN, our monetary policy committees, and everybody in charge of making monetary decisions don't have enough resources or what it takes to be able to manage a dual a unified exchange rate system, which is what the CBN is trying to derive by floating the currency and having two markets and leaving the exchange rate to be determined by the INE window. Now, this forecast is saying that with the way things are going, of course, we see a week-on-week increase in the exchange rate value, and every year at the exchange rate market, I mean, by the end of every week, by Friday, we keep seeing that the exchange rate for our currency keeps going low against its value to the dollar, and they are predicting that yes, before the year runs out, with the way things are going, we are going to see the naira per dollar above 1,000 naira. Now, it is saying that we will still go back to the CBN being in control, and we will be able to manage much better a dual exchange rate system. Now, the EIU made the prediction in its last report about the Nigerian currency naira. Now, the previous month, the Central Bank of Nigeria, complying with the federal government directive, announced the unification of all segments of the foreign exchange market, signaling the end of its control of the foreign exchange market. However, the CBN made it very clear that this decision is not free, okay, but it's going to be closely looked, and they will still have their legs in it, or their hands in it, their head in it. They will still have some control over it. Now, the Apex Bank later clarified that the new exchange rate regime is a managed float. It is managed, meaning they're keeping their eye on it. They are in play in it, And yes, it is not it is a managed floating and not a free floating. Now, based on this alone, the EIU have been able to come with a prediction, which of course is easy out there, that you know what, the CBN will go back to this dual exchange rate system as the unification may not work as it have been planned. Now, the EIU said the CBN, which manage the country money, doesn't have much experience handling a flexible exchange rate system. Even if that may be true, the CBN still have the resources to learn whatever it takes. If the floating is the future of Nigeria, and when it comes to the value of our currency, it might be a long-term policy. Of course, we might not be able to start seeing the result now, but if it is a long-term policy that we will be able to start seeing result, that is our naira gaining some value, then I believe that the CBN have all the results, the resources, the information, the data, all hands on deck to be able to manage this regardless of their experience, regardless of what the predictions are. That yes, the CBN are capable of putting in the experience they have, learning and taking Nigeria to where we will be having a more valued currency. Now, congratulations to Zenith Bank, as it has maintained its top position as the best commercial bank in Nigeria for many years running now. Now, the Zenith Bank PLC has been ranked as the #1 bank in Nigeria by Tier 1 Capital in 2022 top 1000 World Bank ranking published by the Banker magazine, and this has also come down to 2023. So we are seeing 3 years in a row that the Zenith Bank getting this kind of award. And just some months back, we saw where the Chief Financial Officer Mukhtar getting an award for the best the Chief Financial Officer Awards in Africa and all of that. So yes, kudos to Zenith Bank. They're doing a great job together with First Bank Holding, showing that they can grow their earnings regardless of the hardship in the country. And this is job well done to every other business keeping their head afloat in the economy, keeping their head afloat despite the hardship, despite the hike in the fuel pump price, despite the MPR going high, despite the exchange rate not favorable. Well done to every business, be it small, medium, and large-sized businesses. Well done for doing a great job and keeping the economy of the country going come what may. And this is how far we go today on Business and Finance. Keep a date with me next time. Goodbye.